Elizabeth Warren and Bernie Sanders are recommending, they're proposing a new ultra-millionaire tax, a wealth tax. Will it impact you? How does it work? What are the details? What are the chances this thing passes? I've got all those details and more coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So it's not the first time this has been proposed. However, it's got new momentum, new emphasis. That's right. Elizabeth Warren, Bernie Sanders, others are proposing a new tax, a wealth tax. They're calling it the Ultra-Millionaire Tax Act. And they've unveiled their plan. I believe it came out just yesterday. And so will it impact you? What's this thing all about? So if you're not familiar with how a wealth tax would work, I actually have a friend of mine who's also a fan of the Wise Money Show, who actually lived for a time in a different country over in Indonesia. And they have, in addition to an income tax, they have a wealth tax. And so every single year, while he was creating and preparing his income for the year and all those statements, we needed to get asset values for all of his bank accounts and the house and everything else, and so that that government could tax the amount of wealth creation that was generated during that time. Now, in any year that the wealth went down, they certainly didn't refund him money, so that was a little tricky. But that's how it works. And my understanding is this Ultra-Millionaire Tax Act, this same proposal would work similarly. So will it impact you? What are the chances this thing passes, and what are some of the issues with it? Will it impact you? I doubt it. It's going to impact about 0.1% of Americans, so 1 out of 1,000 is my understanding. And so basically, this would be a new tax for individuals that have individuals, families of course, that have a net worth of $50 million or above. Okay, so that's a very, very, very small fraction of folks. What are the details of it? Well, if your net worth, if your estate, if your net worth is over 50 million, but below $1 billion, then there's an annual 2% tax on that wealth, okay? On your net worth, on your wealth. If your net worth, if your wealth is $1 billion or more, instead of 2% tax, it's a 3% annual tax. So that's how it would work. And there's actually several articles about, hey, this is how much Elon Musk would have paid last year in 2020. This is how much Jeff Bezos would have paid. And it's a considerable amount. This would be a lot of tax revenue. They're estimating well over $1 trillion of added tax revenue that would come in over the next decade. So it has the opportunity to bring in a lot of potential tax revenue. Is this a good thing or a bad thing? Well, that's in the eye of the beholder, okay? I'll tell you from a neutral party, okay? I'm not really into politics. I'm into finance. I'm going to stay in my lane here, but I will tell you, we've got a serious wealth inequality problem. And that is that if it's not dealt with, it's going to have serious ramifications. But like we've talked about in the past, check out a video on the cotillion effect that I did a few weeks ago. It's actually, why did the wealth gap expand so much in 2020? Well, there's a theory out there that it's because the more money that's being printed and injected into the economy to try to aid those folks that need it the most, the instant reaction to that is asset prices go up. And therefore, the people that own assets benefit disproportionately than those that don't own assets. And so when money's being printed, or when maybe a new tax is being enacted here because we want to inject more into the economy, in an effort to help those that are unemployed or those that are struggling financially, those plans, those efforts actually increase values of assets. We've seen stocks at all-time highs, housing prices all-time high, business values, privately held businesses at all-time highs. We now have copper near an all-time high. Oil has surged. We've got all sorts of commodities now growing in value. And a lot of this is because, well, people need help. People are hurting. The folks that are struggling from the pandemic, they're still struggling. Half the people that lost their jobs are still unemployed. We've got to help them. And the very process of doing so actually increases the value of assets that the folks at the bottom typically don't own. And so I think there are some challenges with this. And number one, if you have, even though we would all say, oh, I'd love to have this problem. I'd love to have a net worth of 50 million or more. I'd love to have this problem. Most people that have a net worth of that size have owned businesses or own a privately held business or a family business, something like that. And the one problem is typically those assets, those investments, are hard to sell. So if you now have a $10 million tax that you need to pay or $20 million tax, you've got to sell some assets. And closely held, it's hard to sell a family farm, it's hard to sell a family business, it's hard to sell a privately held business in order to pay that tax. And so that creates a squeeze and creates some challenges there. Another challenge that this creates is as those assets then are sold to pay the tax, typically there's an additional tax that's created because you're selling an asset that likely has appreciated, has some value to it, and that will create more tax, will create more capital gains. And again, boo-hoo, these folks, they've got tons of money, but at the same time, that creates a challenge. And for those two reasons, it creates a third challenge, and that is with a new tax comes some new tax loopholes, likely. I haven't read through the proposal, and again, we'll talk in just a second whether this thing actually will pass, but loopholes will be created. What assets actually count towards your net worth and which doesn't? So which of them are exempt from this tax and which are included? That will create some loopholes, and ultimately it will be the attorneys that likely will be the big winners here in crafting documents and crafting ownership to make sure that every opportunity is leveraged to make your net worth as small as possible. So ultimately, those three reasons make me concerned that this actual new tax will go to benefit those that need it the most. And so to me, I think we got to figure out a different way. And I don't have all the answers, but I feel like we need to figure out a different way to limit and manage that income and wealth gap there. So, but we'll see if this thing gets passed. What are the odds? I personally think this thing is going to face significant obstacles. And therefore, I would put the likelihood of it getting passed right now below 50%. However, I give it a lot higher chance than a year ago or 2 years ago or 3 years ago, especially as these billionaires, Warren Buffett, probably the largest proponent, is saying I should be paying more tax. Yet at the same time, they do everything possible to create as many deductions as possible. So they talk out of both sides of their mouth. But I think the chance of this thing passing is still unlikely, but I give it a lot better chance than I would have recently. So we'll see. We'll see if this thing grows. I mean, we obviously have a problem created by the pandemic and created from the past several decades of policies, have a problem with wealth inequality. And I don't think this is the panacea to solve it, but it's very possible this thing will get some legs, grow in popularity, could come to a vote. So we'll see. Those are the details. I've got some links below if you want to read more. In your situation, if you're saying, gosh, that'd be nice to have this problem, wherever you are in your financial life, make sure that you're taking the right, wise steps in your financial life to stabilize your foundation and then build wealth. Stabilize foundation by building margin, paying off debt, building up cash, and then building wealth by investing prudently into the right vehicles for your long term. Work with your certified financial planner on that. If you don't have a CFP, contact one on my team. Find us online, corehorn.com, that's Corehorn with a K, or wisemoneyshow.com, or just send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.